all and welcome back. I hope you're all doing really well. Thank you again for the love and support on the most recent video. I seriously appreciate it. Tons of stuff again to cover in today's video relating to the wider crypto markets and of course some of the top projects we focus on this channel like Hbar Qnt, etc. Some really bullish news happening still for Hedera Hashgraph across the crypto space as they continue to double down on their attitude towards developing the ecosystem even during this bear market. That being said, of course, this hasn't been one of the best weeks for cryptocurrency in quite a while. Taking a look at the crypto bubbles, you can see across the board complete decimation over the last 24 hours and even the weekly, with majority of projects sinking further as Bitcoin continues to bleed out. Looking at some of the projects that I'm interested in / obviously average into, projects like Chainlink at the moment are fantastic buying opportunities for me personally. You've got $6.73 at the moment for Chainlink. Near Protocol is down somewhere around $4, which is always a sort of good buy. Algorand as well at 28 cents. Fantastic purchase. Quant is at the $90 level. I'm interested to see whether this continues to fall. There's been a lot of talk about whether this potentially could come back down to that $45 to $50 range. In those ranges, I will definitely be backing up the truck, so to speak, as Quant has an unparalleled amount of potential for the future alongside projects like HBAR, particularly when it comes to market cap and tokenomic pricing in the future. HBAR as well, the old faithful, down sub 6 cents now. I don't think many people thought we'd be seeing this anytime soon. However, it's happened. And again, there are calls to see whether or not this comes down to 3 cents. Me personally, I'd actually quite enjoy it if it did come down to the 3 cent range, as that again is a fantastic opportunity for me to back up the truck and increase the amount that I'm purchasing on a weekly basis. I average into these positions weekly, always compounding those positions, averaging through the different noise and volatility within the markets to ensure that I don't get stuck at one particular price. And of course, continually averaging down, ready to take advantage of that next bull market. And if anything is to be said about what's been happening with Hedera recently, make sure you watch my previous videos, as the love and support for the project is growing exponentially day by day. The sort of on-chain statistics for Hedera have been growing rapidly. The amount of sentiment for the project's been growing rapidly. The amount of use cases has also been growing rapidly. And it's all during a bear market where sort of a general lack of interest is occurring. Imagine what HBAR is going to be like during the next next bull run, when DeFi is fully fledged. You've got a fully fledged NFT ecosystem, as well as all the other gubbins to go along with that. You're going to see some serious price appreciation for Hedera when that happens. Unfortunately as well though, we have just fallen back beneath a $1 trillion market cap. You can see there 987 billion. And of course, majority of that is being driven by Bitcoin. Pulling up the Bitcoin chart here, you can now see we're sub $19,000. Always stated that this was a possibility. And of course, I never really talk about price potential or predictions or short-term movements to the price. I focus more on what's happening on a macro level, as that tends to govern the wider crypto space, as well as equities as well, which are obviously strongly correlated to the cryptocurrency markets. However, if we just look at this chart per se, we can see that still the next sort of level of support that we could see for Bitcoin by bouncing off of this price that was put in back in sort of 2017, that cycle top at $19,000. That's where we're roughly sitting around. And unfortunately, the next sort of set of resistance points is in that $12,000 to $14,000 range. And if we do fall further down, we'll see a lot of bleeding occurring in the altcoin markets as well, as they continue to de-risk those positions. So what am I doing in order to anticipate or hedge this? Me personally, absolutely nothing. Like I said, I'm still dollar cost averaging into those positions. If the bottom does fall out of Bitcoin and takes the rest of the markets with it, so be it. That just gives me even more purchasing power when it comes to buying those altcoins that I truly believe in for the future. Don't forget, we're looking on time horizons of the next 3 to 5 years potentially. So the next bull run somewhere occurring around 2024, maybe 2025. So you've got a couple of years to build those positions. There is absolutely no rush when it comes to things like this. Interestingly as well, another article has been published talking about investors moving away from NFTs and coins and toward blockchain infrastructure projects. The global audit and consulting firm KPMG has stated. I do find this article to be a little bit misleading in terms of the titles, and it's doing the rounds at the moment on lots of the different socials. but global investments in cryptocurrency companies pulled back to around 14.2 billion in the first half of 2022. From a record of 32 billion the year before, where everything was at its peak. A slowdown that's expected to continue, according to a new report from global audit and consulting firm KPMG, despite the crypto space collapsing significantly since midway through Q1 of 22 due to the unexpected Russia-Ukraine conflict, rising inflation, and the challenges experienced by the Terra crypto ecosystem. Investment at mid-year remained well above all years prior to 2021, which KPMG noted. This highlights the growing maturity of the space and the breadth of technologies and solutions attracting investment. The top deals in the first half of the year were venture capital investors putting 550 million in crypto custody firm Fireblocks, with 450 million in Ethereum infrastructure builder Consensus and 400 million in the crypto exchange FTX. In the second half of the year, KPMG expects investors to move away from companies offering coins and non-fungible tokens. And that's what I meant by the headline being a bit misleading. They're talking about sort of institutional investment into things like brokerages and these sort of decentralized applications beginning to slow down, and more of that funding going toward blockchain infrastructure projects, particularly those that involve the use of blockchain in updating financial technology. So again, this should be screaming alarm bells in relation to a lot of the altcoin projects that we talk about on this channel, namely Hedera Hashgraph, obviously HBAR, things like Qnt, even Algorand, XRP, XLM, etc. All of those have potential to be integrated deeply within the financial systems themselves. Many of them have CBDC pilot schemes taking place, and many of them have almost, unbelievable amounts of sort of robustness and scalability into the future. And this is where you may see those sort of commercial investments begin to take hold, rather than them making a quick buck off investing in sort of trading platforms like FTX, for example. The firm also sees a growing focus on compliance and transaction traceability. Again, it should be ringing alarm bells for you guys. Related products and increased corporate interest in stablecoins as a lower risk path to investing in crypto. KPMG predicts that well-managed crypto companies with healthy risk and cost management strategies will survive the downturn, while the resilience of other crypto companies will be tested very hard as some look to recapitalize at lower valuations. And we've seen that anyway with a lot of those major sort of players in the space beginning to dial back the number of headcount that they have. For example, look at what Coinbase was doing with their sort of staff retention, etc. Regardless of this article, I think it still is important to say that this space will continue to grow over the next sort of 5 to 10 years. Even in shorter time frames, we will begin to see more investment flow back into cryptocurrencies of all different forms, from institutions right the way through to venture capitalists trying to back starting decentralized applications on various different chains. And it must be said that regardless of what's happening at the moment, majority of it is being driven by recession-backed fears of high inflation environments with increasing interest rates across the board, which obviously completely increases the cost to serve and finance that debt. And that is why we're beginning to see a slowdown in the cryptocurrency market. In fact, it's not just crypto, it's equities and economies alike. Important to say that. CZ as well over on Twitter saying that Bitcoin just died one more time. And yet we're still here. And of course, this has happened many times in the past. People call Bitcoin dead, people call cryptocurrency dead, and then it comes back with a vengeance when no one is watching. And then suddenly all the headlines are saying it's the next bubble yet again. It's probably happened about 5 or 6 times at this point. Interestingly as well though, US economist Peter Schiff has said Bitcoin holders better abandon ship before the bottom drops out. Markets rarely give investors much time to buy the bottom. Bitcoin has been trading near $20,000 for the past 12 days. More likely, $20,000 will prove to be a false bottom, giving suckers plenty of time to climb aboard a sinking ship. Better to abandon ship before the bottom drops out. And again, potentially fear-mongering, or him just sort of, expressing what he personally believes. And of course, you need to interpret this in your own personal way. If you are over-leveraged, over-invested into these markets and couldn't stomach an $8,000 drop in the price of Bitcoin as it currently sits, roughly another 40 to 50% reduction in its current price, then maybe you should heed his advice and abandon ship if you can't sleep at night. However, on the flip side, if you're in these markets for the long term and you have absolutely no qualms over where your investments will be going into the future, another 40 to 50% drop in your current portfolio holding may just be a blip on the radar if you can look past all of the noise. And again, none of this is sort of financial advice. You need to make sure you're doing your own personal research. You're not over leveraging yourself and putting yourself into sort of financial jeopardy when investing in these. Cryptocurrency is inherently one of the most risky assets there currently is, and probably will be for some time to come, especially until we start to see more regulation revolving around it. We can see here as well from Watcher, Bitcoin has closed at $18,790, the lowest daily close since December 2020. Some more positive news then for altcoins. Ripple senior advisors have said that there will be CBDC announcements in the coming weeks. And again, I take this with a pinch of salt. We had this sometime last year, I think it was around September, where they turned around and said that the case with the SEC should be coming up for settlement around that sort of period. And again, that materialized into absolute nothingness other than for the case to drag out further. So pinch of salt again with this type of comment. However, it wouldn't strike me as being completely unfeasible, particularly as we've seen a lot of information about CBDCs and Hedera, for example. And we know that XRP is doing stuff in the sidelines behind the scenes. And you've got that Federal US Reserve central bank digital currency team that's being formed in order to stress test and provide different infrastructural solutions. And XRP was named on there amongst others like HBAR in order to help fledge out part of that ecosystem. So we could see some CBDC announcements for XRP. Talking about altcoin prices into the future then, interesting sort of piece of anecdotal sort of statistics, I guess, for what's happened in the past. Solana went from $1.3 to $260, a 200x in less than a year during that bull market. If Quant, for example, and even HBAR matches what Solana did in the next run, and why wouldn't it? For example, Quant and HBAR are just a mammoth amount sort of better projects in the long term than what Solana currently is. Solana feels like it was thrown together to take advantage of the DeFi explosion that we were seeing. I said that many times. They successfully did that. They attracted an awful lot of retail and institutional clients, built that sort of fledgling ecosystem out, and then they've fallen at numerous different hurdles with security, insustainability, non-scalability, all sorts of different things and problems for the Solana chain, stuff that we've not seen on Quant and HBAR. But if they did match what Solana did in the next run, say 2024, 2025, and does a 200x from the current prices, so assuming a $43 bottom for Quant, that would push the Quant price to nearly $8,900. And again, that is completely possible based on the tokenomics. And we could be seeing $1 to $2 HBAR per token, which again would be completely obscene for majority of the people that I know within the communities that have already got quite large holdings and are continuing to pledge more and more of their capital towards buying up those HBAR tokens for the inevitable bull run that will take place for Hedera Hashgraph. We could be seeing millionaires being made around us as we speak, and something to really look forward to in the future. Talking about Hedera then and what's going on with the current roadmaps, HashPack is excited to share the updated roadmap that they've been working on. So they're hard to bring some of the big features, including in-wallet swaps, Apple iOS apps, secure trade v2. What are you looking forward to the most? If we take a quick look at this on the now, the Android beta is currently in progress. It's been launched and they're doing some app optimization. Spoke about this in the previous video. The app is absolutely flawless from what I've experienced so far. The next thing that they're currently putting into progress is token swaps. So you'll be able to trade tokens directly from inside your wallet without actually having to visit a decentralized application. And of course, drumroll, that is being facilitated by SaucerSwap. So again, if you guys wanted more information about how SaucerSwap are integrating themselves into the DeFi and sort of Hedera ecosystem, there's no further to look than some of their key and closest partners. Of course, you've got the DeFi alliance they're part of like Headstarter and Stader, for example. Then you've obviously got HashPack that they work very closely with, and their functionality in smart contracts will be used under the hood to process these in-wallet token swaps. And of course, that means fees and stuff are being paid in HBAR and Source for that Source token price appreciation into the future. And again, it's why it's one of my favorite plays at the moment as a HTS token within the Hedera ecosystem. A rising tide will lift all ships as we see more volume enter the Hedera markets, particularly for decentralized finance purposes and token swaps and all of these new projects. Majority of them are going to be facilitated via SaucerSwap, which means that Source has additional utility going forward. and the likelihood is you're going to see some price appreciation there. dApp browser as well, so an in-wallet mobile browser will be coming to explore all of the decentralized apps built on top of Hedera. Again, this is an absolutely fantastic feature. Next, they're looking at the Apple iOS mobile application, which many people have been asking for. They're looking to revamp their secure trade to a version 2 will be going live. Integrating gaming decentralized applications, so Web3 gaming support will be coming to HashPack. We've got many different Web3 gaming applications at the moment being developed on Hedera. Look no further than Earthlings, for example. And then in the future, in-app cross-chain bridges, so HBAR to Bitcoin, for example, and the Ethereum ERC20. That's a really big one, and that's why I was covering HeliSwap in one of the previous videos. Having that ability to natively transfer from the Hedera token service across to ERC20, for example, as a bridging service is massive and unlocks an awful lot of potential for Hedera. Then you've got things like visual updates, themes and UI updates, and then community features such as rewards, tools and services in the future. And we'll probably get there pretty quickly because HashPack continues to revolve this roadmap as they sweep through and make the changes that they promise. Talking about those themes and then what they're on about, something fun and interesting like this, potentially the ability to utilize your NFTs as backgrounds, etc. within the app. Just literally some customization to the interface itself, which is very, very clean as it currently stands. But again, this just adds that little bit extra to or for majority of different users. Big news update as well as Ethereum developers implement the BELLATRIX upgrade today, which is the final step until the merge, which is now being estimated for the 13th of September. So we're getting ever closer to that Ethereum merge now, less than a week or so to go, and we shall see how that plays out. Ethereum hasn't been performing too badly in comparison to Bitcoin over the past couple of weeks, and a lot of that is in anticipation for this merge, but only time will tell to see whether it actually does go live and what the impact to the Ethereum chain and price will be. Of course, I'll be covering that. The merge, though, is not just affecting Ethereum as a layer 1, but of course the layer 2 is built on top of it. I've covered Polygon in the past, and it is a fantastic layer 2 solution to improve the existing Ethereum network. But the merge will be erasing 60,000 tons of Polygon's carbon footprint. So Ethereum's transition to the proof of stake consensus will reverberate throughout the broader ecosystem in many ways, but it will have a singular impact on the carbon emission profile of Polygon's network. Thanks to the work of Crypto Carbon Ratings Institute, CCRI, we can now share specific numbers on what the merge will do. So the pre-merge carbon footprint for Polygon, 94,782 tons of CO2 emissions. That has been the total emission for Polygon network since inception to the 31st of July 2022. We can see basically there's going to be a reduction here. So 99.92% of Polygon's emissions originate from the chain's activities on the Ethereum base layer as per CCRI. This leaves 50 tons attributable to Polygon's own proof of stake network. So 99.99% of Ethereum's electricity consumption will be reduced due to the merge. CCRI estimates Polygon's post-merge emissions from activities on underlying Ethereum base layer will be about 6 tons of CO2. Now, why am I covering this? Now, it's important to think about the majority of different decentralized applications that are currently built on the Ethereum network. And a lot of those at the moment are obviously at the mercy of the efficiency of Ethereum. If Ethereum's efficiency begins to improve over time and improves due to the transition from proof of work to proof of stake, we could actually see more institutional investment look to take stake in these infrastructure projects, like we just saw about what KPMG were factoring in the future, just due to the nature that renewables are of paramount importance at the moment to most of the G7, G10 countries across the globe, and will continue to become a bigger narrative going forward into the future. And things like this are incredibly important as to whether projects will thrive or die. And currently, at the moment, Ethereum commands an awful large portion of the cryptocurrency market cap. So it is vital that it continues to sort of keep up with the times, so to speak, until better solutions begin to get the recognition they deserve. These other more sustainable layer 0/layer 1s like HBAR, like Algorand, etc. HBAR Qnt as well, a quick PSA. So this was written by ABFT, who's one of the mods over on SaucerSwap himself. Shitcoin Casino is finally here and it isn't going anywhere. HTS allows the absolute cheapest sign up of any other network to be prepared not just to ape into any coin. They will evolve and get smarter, which means you have to too. This is an arms race. And again, I've said this in so many different videos, make sure you're paying attention to these projects that are launching. Unfortunately, there are an awful lot of scam projects / rug pulls that are being dropped onto Hedera, and that's obviously because the HTS is incredibly cheap. In fact, probably the cheapest across the space. We saw this on the Binance Smart Chain back in 2020 to 2021, and Hedera is a fraction of what it costs to run those projects on the Binance Smart Chain. So we can only assume that this is going to get worse before it begins to get better. And unfortunately, the only way to weed out these projects is to make sure you vote with your feet, you talk about it. If you are involved in one of these projects and you accidentally get rug pulled, speak out about it immediately to protect others. It happens. It's happened to me in the past, and I'm sure it will happen again in the future. The only way we can get around this is making sure we stay as transparent as we can with the remainder of the community to ensure that people's funds are safe and that they're investing in valid projects. And that's what I wanted to talk about as well, is making sure that any project that you decide to put sort of funds into is completely valid. And answering simple questions like, well, why do they exist? What problem are they trying to solve? Is this just a meme project? Are they developing the ecosystem any further? Or are they just doing it to make some quick money? How are they going to make money? You know, how legitimate is the development team behind it? How legitimate is their roadmap? How far out into the future are they looking to build? These same questions that you'd have asked before investing in HBAR, think about before you invest in any of these projects as well going into the future, and you shouldn't do too far wrong. Unfortunately, most people get burnt here because of FOMO, pure and simple. They see these projects, one of them will do really well and the token price will appreciate 1000% in 48 hours. They feel like they've missed out and they'll be looking for the next one. And that's unfortunately how most people fall victim to these types of scams, these types of rug pull projects, looking to make obscene amounts of money quickly. And unfortunately, there is no magic pill for any of that. Right, rounding up this video then as it's getting longer, quick thread here from Citadel Wallet on why Hedera's network services are game-changing in the crypto industry and why it's important for Citadel Hardware Wallet to support all of them. And of course, they're talking about the Hedera token service with those different features effectively in comparison to things like smart contracts. So the Hedera consensus service, dApps, which require fair ordering and timestamping of transactions such as auctions, Internet of Things, payments, hybrid blockchains, exchanges, stock markets, etc., can utilize HCS to add public trust, security, traceability, and auditability to these use cases. The Hedera token service, which goes hand in hand with the HCS, smart contractless token service built on Hedera's native layer, supports 10,000 plus TPS, and of course that's rate limited, we all know that, and lowest cost of transactions. Tokens inherit the highest AVFT security of the network, fairness, and transaction finality. There are two different types of HTS tokens. So you've got HTS tokens in NFTs, tokens which can be used for governance, economic incentives, rewards, and payments in dApps such as games, distributed service networks, DeFi, etc. And NFTs will be used to tokenize anything from art, real estate, driver's licenses, stock ownership, bonds, ownership of anything, etc. Something that I've been banging on about for ages, and that's why it's really powerful. Decentralized identities as well. So Hedera accounts will serve as a decentralized identity in some applications. In organizations or companies, you'll be granted special privileges and rights to your decentralized identity accounts, and signing transactions can mean approving important decisions. Again, this is a use case that no one's really thought about yet. Think of traditional company structures where you need sign-off rights. For example, a manager will have a certain budget sign-off sort of limit, for example, and depending on the position, etc., you have these different rights, and sometimes that can murky the waters a little bit in terms of who can sign stuff off. With something like this, with a decentralized identity, within these types of wallets, if companies adopted these types of systems, you can do this in a fair and robust way where the chain via gossip to gossip is able to process these transactions and check the information behind the scenes before something gets signed off, or alternatively rejected because someone doesn't have the correct credentials to make a decision. And this again helps reduce those frictions, not in a market, so to speak, but internally within these companies, which again improves efficiency in the long term. Scheduled transactions. Thanks to Hedera's unique hash graph consensus, with fair time stamping of transactions, scheduled transactions become possible. Notable use cases include HashPack's service secure trade, multi-sig signing during set times, and self-recursive smart contracts. Of course, you've then got smart contracts, which SaucerSwap have been leveraging. The EVM compatible smart contracts are more than 10 times faster than Ethereum's. and gas fees cost just cents. Additionally, smart contracts are, of course, ABFT secure, reach complete finality within 3 to 5 seconds, and are fair without a chance of front running. File services as well, applications which require small distributed storage systems for smaller files and documents with public access can utilize Hedera's file service. Native staking, of course, Hedera is a proof of stake network which incentivizes HBAR holders to stake to governing council nodes to increase network security and delegate voting power to a trusted node. Staking requires a signing of a special transaction which doesn't lock your HBAR. Random numbers, which we looked at a while back now with the Hedera improvement proposal, but random number generation service is one of the latest services coming to Hedera, which allows dApps to make API calls to generate publicly trusted random numbers for gaming, NFTs, online gambling, casinos, and all types of other use cases which require trusted random numbers. Now imagine being able to sign all of these game-changing Hedera transaction types from a single secure hardware wallet device, and that is what Citadel Wallet is looking to deliver. Of course, I'll provide more updates on this, as I know many of you guys are fond of hardware wallets and have been eagerly anticipating Ledger's adoption of HTS, which is still probably quite far away, unfortunately. Final thing before I round off the video then, more people asked me about Milk because after I covered it in the previous video. Of course, this is a token that's being built on top of the HTS. Again, I haven't done much research into the project, its longevity, anything like that. So this is by no means an endorsement. Like I said, the only reason I took interest to it was because of the 3% transaction fee for transacting the tokens. 1% of those was being distributed to SaucerSwap, Plank, EPOCH NFT holders. Of course, me personally, I own a bunch of those NFTs, and I know some of you do as well from when I did those videos absolutely months ago at this point, and I'm probably still holding them, and this gives you the opportunity to earn a small amount more as well. From what I have seen in my own personal wallets, I have been airdropped some tokens, which I can only assume is now coming from those 1% rewards. I believe all you need to do is associate the token ID on the wallet that of course holds the NFTs, and then over time you will basically be airdropped tokens as a percentage of the transaction fees that get processed from transacting Milk tokens. But that an awful lot of times there. And then of course you can just take those tokens and sort of sell them or hold them or do whatever you want via SaucerSwap. Again, absolutely no idea about the longevity of the Milk token itself or what they're aiming to do in the future. Was only interested because of that 1% kickback to Plank EPOCH NFT holders, and that's the only reason I've associated that token ID for now until I get the opportunity to do more research into these projects. But like I said, stay on guard and make sure you're doing plenty of research before getting involved in these. The most common scams are those asking you to provide liquidity on SaucerSwap Labs, and then they'll drain all of the liquidity from those pools, effectively rendering those tokens worthless going forward. If you enjoyed this video, leave a like, drop a comment if you've got something to say. I do appreciate that this was quite a long one, and until the next one, I'll catch you then. Cheers.